So now I will ask, what you all do, and why you're here. So, uh, all students, is anyone grad student, postdoc? Okay. Anyone working with a startup or thinking about working with a startup? What field? Like software, robotics, software. Uh, what's your background?
I'm a psychology and business student at University of Pittsburgh.
Okay. What year?
I'm a sophomore now.
All right.
I'm fourth year PhD student in the mechanical engineering department here. Thinking about creating a startup focused on medical device and wearable sensors for
Yep.
muscle activity.
We have probably 4 clients who I wouldn't call them remote patient monitoring companies, but they touch it in one way or another, depending on your clinical application. Very hot right now.
Biomedical engineering department, working on brain computer interface.
Awesome. Very cool.
Thinking about like doing startup focus on field, especially non-invasive brain computer interface. So kind of PCs and then
Yeah, right on. In the back. Yeah. Well, quick background on myself. I was on reformed engineer. Then I went to Tepper at night. Fabulous experience. Absolutely love the program and learned a lot from the other students as well. Went to a private equity firm and then to do M&A for United Health Group and Optum. So corporate M&A on the buy side. Spent about a decade on the buy side before switching tables. Now I represent sellers, so companies seeking to be acquired or raising capital. All healthcare technology, and our clients either typically sell. We divide into healthcare or pharma life sciences. What gave rise to this talk, and just so you have an orientation, there's other speakers who focus more on getting a startup set up, your first steps of getting funding. So having been active in the early stage investment ecosystem here, for well more than a decade, Pittsburgh's long had a bit of a gap where there's lots of funding opportunities for early stage companies. You have Innovation Works, Alpha Lab, Life Science Greenhouse. The Swartz Center has their own fund, Project Olympus. So there's a lot of opportunity to build up, call it $500,000 of funding to like start getting out of the gate. Maybe you add an angel round with Blue Tree, and you have a couple $1,000,000. And then there's a bit of a funding chasm before you're able to go out and raise, call it $20,000,000 from large national institutional VCs. So there's this kind of gap where people are like, hey, I got funded, we're doing work, I need to level up, but I don't need $20,000,000. And I can't go back to the well, I need more than $500,000. So there was a bit of this gap. So that's why I typically talk here about, hey, like, how do you go source funding? What's the process and how are you prepared for it? And then the other thing I hear a lot are from, I was coming out of Tepper. So from non-technical students who are interested in supporting a startup is like, well, I'm not a coder, I'm not a scientist. How can I help? What value can I bring? And that's a lot of what we're going to cover today. It's applicable for every single company that's going to go through the funding process. And this is not what I would call difficult work. It's just time-consuming, iterative, laborious work that everyone needs. And you can save yourself a lot of heartache doing it right, and thinking about it when you're putting your team together. So that's what we're going to cover. Let's keep it light and conversational. So as things come up, if you have any experiences or questions, you want to ask about, just raise your hand and give a shout. Did want to ask you two what your background is.
So, we think about making Google that comes to you,
Fantastic. Some of Carnegie Mellon's recent investments, I think, are kind of tangential. Not that, but tangential.
It's Keegan. I'm a machine learning PhD student, and I'm starting a company around data collection for robotics.
Fantastic. All right. Well, so this will all be applicable. And again, as you're thinking about like putting your team members together, the folks at Scotty Ventures, there is a finance and investment banking club of students that are also looking, for opportunities to build resume, get involved, to help out. This is all work, that they can do. So the other thing that I hear a lot from people who hit the fundraising circuit is you're having a lot of conversations and you hear this a lot. We're so excited about your company. You're an amazing company. It's so amazing. It's just not a fit for us. So what we're going to talk about is how to hear this less. Finding the right fit, a little bit of what investment bankers do. For companies raising, let's call it under 20, 25, 50 million bucks, probably not actually applicable to hire an investment banker, but when you grow your company, it's big and successful, and you're going to go have your big transactions, like what is it that these people do, and how can non-technical students support. If you only remember one thing from the whole talk, it should be Ryan Splenda's phone number and email. So take a moment, write down his name, write down his email. It'll be in the deck. Ryan is the business librarian, and he can tell you how to use all the databases that we're going to talk about, and you can book time with him, and he and his staff will show you how to do it. Since I've been working with Ryan, he's actually even published on supporting entrepreneurs using these resources, and is a little bit of a industry leader in that respect within his field. Another great resource specific to entrepreneurs, also available in the library, is Jen McKee. So if you leave with nothing else, look up Ryan and Jen. They are superheroes. They're like having a cheat code. The other thing I'll highlight is that we hire people that do this, and we are hiring people that do this right now. So if anyone online or in the room finds this interesting and thinks you might want to do a lot more of it, reach out to Tracy or go to our website and submit an application. I'd say most applicable for sophomores and juniors is typically when we begin the recruiting process, and then we'll stay in touch for 2 years leading up to graduation. Seniors and recent grads also welcome. So if you find this interesting, drop a line to Tracy. Something I like to highlight, so these are databases that are available to you for free as a student through the library, but they are not actually free. Each one of these costs hundreds of thousands of dollars that you've actually already paid for. It's just baked into your tuition. It's not free at all. You've already paid for it. So let's use it. I did not learn how to use these as part of my coursework at Tepper. I learned it from other students, and it was, again, like a secret weapon where I blew other people out of the water in my project assignments and in my internships. And a little bit also, I was like, why? Like, I didn't know we had a business librarian. No one tells you that. I didn't learn how to use any of these. In the coursework, I learned it from other students, and it's some of the things I've gotten the most value out. So that's another reason why, I like to have this talk. Pay it forward. None of these resources are perfect. They all have their own flaws, and you should kind of piece them together. They all have some overlap, and they all have unique information. And I'll cover a couple of them. MarketLine and CB Insights are great places to just sort of get started. The UI is pretty approachable, and it's good for like ideating and at least getting the ball rolling and getting into a direction. I'll spend some time on Cap IQ. That's where you can go real deep. And locally, you have access to the Pittsburgh Business Times. They publish lists of firms and their CEOs and their contact information based on industry. Particularly in the early stages, some of the best investors you can get are other successful business people from your field. And regionally, the Pittsburgh Business Times is probably more applicable, than AngelList and Crunchbase. Those are national resources and they're good, but a lot of what we're going to talk about today is working the network. I'm going to start with a couple CMU examples as to the types of information that are available in these databases, and then we're going to talk about the process of going to market and fundraising and how you use these databases to get prepared. But Solvi was a company that got 50K from the Open Field Entrepreneurs Fund right here. I don't think this building was around in 2014. It was across the way, but same fund. And then followed up with a seed investment from the university. So, like I said, there's money available right here. And then their next transaction was a big one, and they're required by Zoom. So look at that. That's fun. Homegrown CMU startup right here. That's pretty nice win for everyone involved. So in these databases, you're able to see who all, not just the investment firms that participated and in what rounds and when they came in, but actually who the partners at those firms were. And you can sometimes also get the valuation information here, pre and post money, as well as other details as far as the cap table and the terms of the investments. So that's like good information to know when you're like, hey, they have a company that looks kind of like my company. Those investors, if they like this, might like mine. What types of deals are they doing? We like to talk about locker room talk when people talk about their deals. Everything sounds great when someone's bragging about their deal. There's a lot of details that come along with it. A point you'll hear me make several times here is that investment firms don't cut checks. Partners and people cut checks. So it's important to first identify the firm, but then you actually need to know who to speak to. And you have their angels listed on here as well. Cap table history, liquidation preference. So another thing with deal locker room talk is people always talk about the headline number. And this is important to keep in mind when you do get an offer or a term sheet from an investor. People always compare the headlines like, wow, this has a big valuation. I want a big valuation. That's cool. The value of a deal can rapidly erode depending on the terms. The terms are equally, if not more important than that headline number. So one of the things a banker does, and something your attorneys, if you were doing this, you would have an attorney, can help you do, is compare, try to get to apples, because it's not all about the headline. You have dividends, the liquidation preference comes off the top before any proceeds ever come to you. Another CMU example here, and I point this out you know, when you are looking for investors and good investors are out there in the market telling you what they like to invest in, you should listen to them. So when you find you're like, hey, I'm, similar to Randy's company here, Featherland Capital invested. Elizabeth Farrow was the lead partner. Go check out what their investment criteria are. When you talk to investors, a great frustration and a big reason people get like a low hit rate or a low response rate when they're doing outreach is they didn't bother to check what the investor is actually interested in investing in. It's called spray and pray. I'm just going to send out my materials to everyone and like see who responds. Well, if the money that you're seeking doesn't fit in their target check size, or your company doesn't fit within the size of the companies they're investing in, like don't waste your time, reaching out if you're not close, if you're not within the target industries, if you don't match the traits they're looking for. And if you do, highlight those things in your outreach. Show that you actually went to the website. They're telling you what they want. You should be able to respond and say, hey, I meet your criteria. These are all the reasons you should talk to me. And compared to a lot of the outreach they get, they would, be pleasantly surprised and say, wow, someone took the extra minute to read our website where I list my email and how to get a hold of me if you meet my criteria. We will talk through the hierarchy of introductions and how to work the network. Something else that's available on these databases. So in addition to, looking here, hey, who are the investors in Industry Weapon, another good Carnegie Mellon company. In addition to Ed Engler, great VC, you should start with Ed. He has a room named after him in the back here. It also lists the service providers. So if you are trying to think through like, hey, I don't know, Ed, Allison and Dave are on vacation. How can I get an intro to Ed? I don't see any connections on LinkedIn. Don't forget the attorneys, commercial bankers, investment bankers, insurance underwriters, all the accountants, all the service providers that go into making all these deals happen. They're also connected to all these people. They will want to work with you. They're here to win your business, and part of that, a service that they provide on both sides of the table, is making these connections. So don't forget about the service providers. They're a approachable resource in your network. A fun Swartz Center example here. Part of finding out who to reach out to. Sometimes you have to be a little scrappy. Copilot won the McGinnis competition and then went on to do 2 subsequent venture raises. They are now called Trainwell. That's why I put a little box over there. But their first round right after winning McGinnis was with Hyde Park that did not publish who the partner was. So typically there's a press release after any deal, and you'll have a quote from the founder saying, we're so excited to work with these investors. And you'll have a quote from the investors saying, we're so excited to work with the company. And the person who's quoted is typically the person who led the deal, and that's who you want to reach out to. They didn't list the partner who led the deal, and I just made the point, firms don't make investments, partners make investments. But she did have a quote on Twitter. So I was able to track down her name on Twitter, and that's who you would want to reach out to. So you have to be a little scrappy and dig around.
Where would you find those announcements like that? You said Twitter. Where would other places be?
Yeah, so one, they're typically put out on the PRN Newswire. So when you're looking for like a Google search term, you can include the PRN Newswire. They will be published always on the company websites, always on the investor websites. And then they're picked up by like industry publication aggregators. But the source of those quotes, that everyone picks up and then repeats and reverberates over. It's the PRN newswire. That's where they're published.
Thank you.
So other thing to be aware of here, the fantastic resource that you have from being in this room. Carnegie Mellon and the Sports Center make a lot of investments, and they have a lot of co-investors who co-invest with those investors. So inherently, you are already starting with a pretty robust network. You can't read the small print because there are so many investments, because we're in the room with such an active investor, and they have 92, besides a little bit out of date, call it 100 co-investors. So right out of the gate, if you start in this room, you have a network of 100 co-investors who have already co-invested and are comfortable with and have vetted and have a rapport with the investors who are in this room. So radiate out from your core. I have 2 spreadsheets listing all this out that will be made available with the slide deck through Allison. So you'll be able to download this all in spreadsheet form, and then it's also in the slides. So we're about to kick into, all right, so like I want to go raise money. What are the steps and how do I get prepared? Before we kick in there, any questions, thoughts people want to call out before we dive in?
Wondering, I guess, do you have any tools or tricks to find people's email addresses, or do you just like?
I mean, LinkedIn's pretty powerful, but I will point out, so these screenshots are from CapIQ. Their emails are listed next to each the emails, phone number, LinkedIn, and or link next to every person's name. All right. Steps we're going to talk through here. The first step is a little bit of self-reflection. So know thyself. How would you characterize the company you're at in terms of an investor's profile? If I'm an investor looking at your company, how would I characterize it? You can then find comparable companies. This is a great place to start. So things you should be thinking about, what stage am I? Investors typically tend to focus on various stages, and you can also screen for these stages in the tools we're going to go through. Seed, pre-seed, Series A, B, C, D, late stage growth, buyout. Investors have a mandate from their limited partners. So unless they're individual high net worth persons, funds raise money from limited partners. Limited partners are institutions and people who have given them money because they've been pitched on their own cap raise on some thesis and some mandate and some parameters that they're going to invest around. So investors are supposed to stick to what they told their investors they were going to do, which is, I'm going to invest in this certain stage of company, this certain size of company. I'm going to seek these types of returns across these industries. So first, characterize yourself in those terms, and then find companies that look adjacent or similar to your company. Then we'll talk through, making contact. What's the role of the board? At the end of the day, everyone says, oh, my board provides advice and guidance. That's great. Advisors are great. The board should be ponying up dough, and they should be providing capital, and they should be bringing in other people who are providing capital. And if you have a board member that is not contributing capital and they're not bringing other people who contribute capital, maybe they shouldn't be on your board. And when you talk to someone who wants a board seat, make sure that they're reserving capital to fund your follow-on rounds. They should reserve at least 3 times the initial check for follow-on checks. You don't want one check, you're going to want many checks. And that they will bring in other people who also have checks. That's a big role of the board. And if they're not going to do that, maybe it should just be an advisor relationship. And then being prepared. What are the expectations and what materials to have ready? When you go in and start these conversations, it's best to hit the ground running. A lot of CEOs get caught in an endless fundraising trap. This results in them not paying attention to running their business, which means the business then often misses its performance metrics, which makes it hard to raise money. So then you're spending more time raising money, less time paying attention to the business, and it turns into a never-ending spiral. So when you do decide to go raise money, all of this work is to get prepped to make that fundraising process as short and efficient as possible so you can get back to running your business. When I sign on clients who want to go to market, many of them ask me, Ben, what's the thing that I can do to most affect a successful outcome and get the highest, best value for my business? My answer is always, keep your head down and focus on running your business. If you hit your numbers and do what you say you're going to do, and you grow and operate efficiently, and you put up your performance metrics, that's the number one thing that you can do to affect a successful outcome. Deals are distracting. Fundraising is a distraction. A fundraise is not a successful achievement in and of itself. Fundraising does not increase the value of a company. Just because you put money on the balance sheet doesn't mean your company got any more valuable. It just means you have money in the bank to go do things that create value. So, step one, a little guide here when you're going through the introspection process. These are the typical types of categories that investors sort. Hey, this is my profile of company that I like to invest in. This is how you should think about yourself. Do a little reflection. And I also like to radiate out, so you don't have to say, hey, we're autonomous cars. You can say, hey, we're mobility. We're transportation. We're infrastructure. You can radiate out. Don't hem yourself in, cast a broad net, and then, you can rank, order, and prioritize. There is a balance between quality and volume. You need enough volume to earn the privilege of focusing on quality. There's you're going to get a lot of no's. It's just part of the business. And part of the process of raising money, and you have to be comfortable with that. It's like sales of any sort. You're going to get a lot of no's. So you need enough at bats to give yourself a shot at talking to people who will say yes. So you need a certain volume. And then once you have enough volume, then you can sort for quality to give yourself the best chance that you're having the highest quality conversations with the best chance of converting to yes. So profile your own company, and then that will allow you to identify companies that also match your answers to these questions.
Companies that do invest, or like VCs that do invest in you, out of those 5 points you had there, is there one that you think rises above the rest? They will not deviate from this, or is there just one that you think is more significant to?
No, but so the answer to that is no, but one of these is very mechanical. So the size of checks that investors cut is typically a function of their fund size. They need to have a diversified portfolio, which often means 20 to 25 companies. I just said you want someone who will reserve 3x their initial check for follow-on capital. So if someone's raised $200 million and they need to invest in 20 companies and they need to reserve, over time, it's not 3x because they're going to have some losers and then they'll over-index to winners. You don't keep, throwing good money after bad. But, generally speaking, think, 3 times the initial check size. That will, within a range dictate the checks that they cut. So if an investor says, hey, we only write $100 million equity checks, you're like, well, I'm raising 20 million bucks. That's a pretty mechanical screen. Like they're not going to be able to deviate. If they cut 100 and you're looking for 90, maybe. But that's pretty mechanical. And you're saving your time and their time by paying attention to it. And I'd say with that will also come company stage, which really comes into pre-revenue, post-revenue. Is a product development? What's the use of funds? Is it for developing a product and developing technology, or have you developed the technology, proven the use case, it's effective, and now the focus is really on, hey, let's go sell it and market it. Or one step after that, hey, we're post-revenue, we're profitable. We've kind of honed this motion, the technology works, and now we're looking to scale and like really, now that we've honed the motion, pour gas on the fire. Investors focus pretty strictly on those. You're not going to find a growth investor who's going to do like a seed round with a company that hasn't developed the tech yet. Or investors that only invest in profitable businesses will not invest in companies that are still burning cash in development phase. So those screens can be pretty mechanical. Outside of that, when you think about business profile, the industry, the target consumer market, you're also now getting into things that are how they provide value to you. You want investors who are able to give you applicable advice on how to build your business, how to go to market, how to sell, make applicable customer intros, help you negotiate contracts that are specific to your industry, enter new markets. So investors tend to stick to industries where they have experience doing that because like, hey, I've done it before. And you kind of want investors who can offer that advice. So that's where, it gets a little soft, but people tend to gravitate to, invest in what you know. And you as people seeking investment, want investors who know what they're talking about and bring more than the check. So some of these are mechanical and some of these are really for your own benefit, as well as the investors to make a fruitful relationship. Ultimately, taking someone's money and taking on an investor is like a marriage. And it is easy to get along when everything's going well, and you will find out who you have teamed up with. Like when the company goes sideways, you hit a rough patch, and every company hits a rough patch. So think about that when you're thinking about board members as well. How is this person going to behave? Are they going to pull back or are they going to lean in? When we inevitably hit a rough patch, miss our numbers, run short of cash, have these problems. So finding comparable companies, you've profiled yourself. A great place to start, just to like get the brain juices flowing, is CB Insights. They have pre-built industry landscapes, or what it's called. Investment bankers publish these as well. So use the term industry landscape, fill in your industry. But that's a great place when you're thinking of comparable companies. Again, get the juices flowing, see what the descriptors are, and the other companies out there, and say, yeah, I'm more like this company, I'm less like that company. This is an example of one of the landscapes. So you see they divide it into subsectors, and you have all the companies' logos here. And what you will find as you dig into who funded these companies, back to the theme of industry and end market. Do you know these customers? How can you help me get more customers? You'll find similar investors investing over and over and over again with companies across the landscape. Investors with really big portfolios can invest in companies that maybe aren't direct competitors, but like pretty adjacent competitors. So think like Y Combinator pumps out hundreds and hundreds of investments. They can't screen so much on competitive dynamics because they're so active. the smaller the portfolio gets, the more sensitive the investor and you have to be about like, well, I don't know. If you only have so many intros to make, like, are you going to be divvying them up between me and your other company that sort of competes against me? So great place to start. You can then get a list of investors who are active in that landscape. You can see here, just starting with fashion, which was the last landscape. They have 805 active investors. You can see, when you click on each one of them, which series they typically invest in across what checks. And we'll pick one of them. You can see, you can then cross-reference, Upfront Ventures has made 4 investments within fashion over these times. You can see what their check sizes were. So there's a lot of tools that you can then cross-reference, sort of narrow down and feel out like, hey, actually, this one looks pretty good. I'm going to put them on my list. I will call out that the data is not always super clean. So this is both in CB Insights. The last page said 4, this page says 7. So back to my first point, like the data and all these things are pretty good, but like none of them are perfect. So like take them all for what they are. What I'm hoping to call out here, like I said, with Featherling as an example of, hey, here's an investor who tells you exactly what they're looking for and how to contact them. They are out there. They are trying to find you if you're a match. Something adjacent to a red flag. I'm not going to call it a red flag, but it's a pet peeve of mine. It's a pet peeve of Dave's. And Dave knows a lot. You should trust Dave. Use Dave. Are investors that don't tell you those things. So like Break Trail Ventures doesn't put on who's the person. I've been talking about like partners make investments. All right, you're a firm, but who's the person? Well, one way to find these things is through the SEC, mandatory SEC filings. So this is another CMU company, Bazooka Jane, which I think is a fun name, also known as Trust Lingerie. Sophia Berman, who's awesome. She's still local. Use her as a resource. But you can find Jay Hirsch's name on here. You can find his address as well. I don't know why you're being so secretive, Jay. The amount that he put in, and then you can look into Jay's own fund offering, where again you have his contact information. He was going out to market to raise a $20 million fund. As of the time of the filing, he hadn't raised it yet. So Jay was seeking to raise a $20 million fund. I would expect, if his fund's active, that's what he got. Here's his address, and that's where to find him. So like, put it on your website and be upfront and open about it. Other folks freaking put it on their LinkedIn. So, a lot of this is just signal sorting. But Dave likes investors who are out front and open. This is who I am, and this is what I'm looking for. This is why you should talk to me. This process is hard. Let's not make it harder than it has to be. So now I'm going to get into, you got the ideas flowing. You have some comparable companies, like, what your profile is. The thought process has probably helped you hone in on, what the ask is, and where you should be focusing. But now you actually have to go build a list of investors that you're going to go reach out to. So like, where do you start? So after years and years and years of complaining, be careful what you ask for. That Cap IQ had not updated their UI in like 20 plus years. Well, now they did. I find it incredibly difficult to work with now, but I also complained, when they got rid of Windows 98. I'm still complaining about that. I don't think it got any better since then. But you know, if you're new to it, maybe you'll have an easier time picking it up. So there's a new Cap IQ. Great, awesome. They have a module called Screener. You're going to start in the Screener. Confusingly, you do not, looking for investors, want to go to the Investor Screener. Would sound like that would be the thing to do. Don't do that. That's only for public company investors. That's not what we're talking about here. You want to start with the Transaction Screener. So we're going to find, again, those comparable companies to yours, and then it'll list out all of their investors, and you can begin adding them to your list. So that's like Cap IQ tip 1. Cap IQ tip 2, if you hit the question mark button in the top right corner of the screen, they have a video on how to build a transaction screen. Watch the video. Step 3, call Ryan Splenda and ask him to show you. Sit down with you at the library and go do it together. It blew my mind when I found out that you could actually ask the librarians to like run the screen with you. Like step by step, they'll sit down, work through it all. That's what they're here to do. Amazing. It's like cheating on your homework, but it's allowed because it's at the library. They also have a tool here. I haven't used it before. I submitted a request. I haven't heard back yet. It seemed like you can ask one of their analysts to call you and run a screen for you. If that's the case, it's pretty cool. You know, it's kind of like, I don't know how many times you want to call Ryan, you know, maybe like once or twice, but then at some point it's like, hey, I taught you how to do it. Go. And then you can use Cap IQ. But watch the video. So the example I'm using here is the most recent investment that Carnegie Mellon has made. They made it 1 month ago in a company called RoboForce that does AI software for autonomous vehicles. So the people here who are talking about, you know, I think he's more software. You're more like actually, you know, vehicle focused. The last 2 investments CMU's made are both related to that, so it's an active theme for them. I know format's difficult to read, but things that I'm pointing out here. So the companies, when you're going through here, they are categorized according to the primary industry code. So for software for robotic and autonomous vehicles, that's industrial machinery, supplies, and components. Like, wow, that doesn't like sound super like on point. But these are government and tax issued codes, and that's how they're categorized. No. But you know, you're going to want to pay attention to these codes. So like if RoboForce, if that's the primary industry they're coded under, and you're looking for, you know, investors who invest in companies like that, on the screener, one of the variables that you can select for is primary industry. So this is a way to know like which one to pick. You're going to read through these industry codes and you're like, these all sound kind of archaic, like some government people wrote them 20 years ago. Which one should I pick? Find a comparable company and see how they're categorized. Also a new thing with Cap IQ, I'll show this on another slide as well, you know, when we're going through how to do the screen. They are moving in the same direction of CB, where they're categorizing and grouping companies by theme. So they call it topic tags. So RoboForce is in the autonomous vehicles topic tag. So just like CB, you could click that and it'll show you all of the companies they've grouped under there, which is super helpful in like getting somewhere fast. So that's new. So as much as I'm going to complain about the new UI, you know, that's a pretty handy feature. And then down here, I'm also listing out the angel investors, like the individual angel investors who co-invested alongside CMU. And at the bottom is the offering amount. So those are the things like when you're looking at comparable companies and now you're like, okay, well, I don't want one comparable company. I want to find 100 comparable companies. You know, those are the things that you should be looking for. In the screener, same things we just talked about. So you click in the screener. Here I'm highlighting the investment round or the investment type. So early stage, venture, growth, like which series. M&A. It's a private equity firm. The business description, so you can see it up here, the number of companies that match the screen went from over 250,000 down to 777. This is an iterative process. So you put keywords in the business descriptions, you put the transaction type. I'd say look for the last 3 years. You don't need to go farther back than that. You want people who are active now. You can keep it to US and Canada. You can add Europe. These are the variables. But this is an iterative process. So run a screen. I had more descriptive keywords and I came back with 7 companies. 7 companies is not enough companies. I eliminated one. Now I'm at 777. Like, maybe that's more than I want. But you scroll through the companies. What you'll find are some good ones that you can then click and add to your list. And you're going to find someone that don't apply. Like forever, no matter what screen I ran, I got like Chinese marijuana companies. Like, not applicable, but they're going to be in there.
Do any of these platforms include family offices?
They do. So that is an option in CapIQ. So RoboForce here comes up in the screen. That's another good way to see if your screen is coming up with the types of companies that you want. You've identified a couple comparables, run the screen, and then see if your comparables are showing up. That's a way to test if you're using the right keywords. But it's iterative. You're going to do it over and over and over again, kind of hone it in, and you'll add some from each batch. So don't think that this is a one and done type thing. Separately, again, not under investor screening, under the screener, which would sound like a place you would want to go. Under transactions and private markets, there's a tab for investors, which there is the investor screener that you want to use. And that's where you will put in the transaction type, the check size, the industry. And this is also a good place to quickly look up activity by investor. So if you know the investor's name and you're just trying to dig in on them and look up who their co-investors are, this is where you would go to do that. This is another kind of alternative path to get to the same place on the transaction screening. Under transactions in private markets, you can go to recent transactions. And then this is where you can screen using all of their different kind of landscape groupings. So they have a long list now. This is, again, a new feature kind of similar to CB. So if you just want to know, hey, I want all the Series B and C deals in North America in the last 3 years that were A/B testing for machine learning companies, this is where you would go for that. It's just kind of a quicker way to get through the screening process. So it will take a while, but that's where this information is. And again, plan on it being iterative. Each round, you are pulling out names of investors and their contact information, their investment criteria, prior investments that they've made. I'll show you the categories you're going to want to keep on a spreadsheet as you build it out. And that's the exact type of work that a student from Scotty Ventures or an MBA student, can do that every single startup needs. MarketLine, a good place also to get a jump start and get moving. Their search is super basic, great way to get good detail and find applicable transactions and who the investors are. But you're not going to get as comprehensive a list as you would out of CapIQ. But another handy feature in MarketLine, if you find I'd say 2 really good transactions, you're like, man, that company's just like mine, and that investor and that size of deal, that's just what I'm looking for. They have a feature with a button at the bottom called Ask an Analyst, which are MBA students in a basement in Chicago. You click Ask an Analyst, you put in your contact information, you write in the box, I am looking for comparable transactions to I found it what works best. That's why I said find like 2 really good ones. Put in 2 examples. They have transaction IDs. Put in these examples. Find me 100 that look like this. I write in, contact me. This is my email. You get no confirmation that anyone has received your request, and it takes a couple days, and then an email will show up from this basement in Chicago, and the whole screen is complete for you. So I wouldn't rely only on it, but if you're looking to like get a start, you're looking for to leverage someone else's labor, double down on your efforts, get some other resources. You've already paid for it. Ask an analyst. Some, poor MBA students trying to like build some reps doing this. Why not do it for you? All right. So you've built out your list. You went through Cap IQ. You found all your investors. Now you know who you want to go out to. But like, how do you actually, approach these people? So there is a hierarchy of introductions. There's no getting around cold outreach. It's part of it. You're going to do it. It's kind of funny for me. A lot of MBA students who are interested in investment banking approach me and they're like, "Hey, Ben, I'm interested in investment banking." And I say, "How do you feel about cold calling?" And usually I hear like, "What does cold calling have to do with it?" And you're like, "Oh, like I bet you watched a lot of TV." So that's going to be part of it. Get comfortable with it, but nothing beats a warm intro. Start with Dave, start with the Schwartz Center, start with CMU. You have 100 co-investors that they already co-invest with. Investors like to invest with folks they've already invested with. They've kind of pre-screened the dating. They've been in boardrooms with these people, with companies that have had hard times. They worked through it. They're like, we're simpatico. I would like to co-invest with you again. So you see investors co-invest with each other over and over again, in part for that reason. So if you're checking your LinkedIn and you're checking like the CMU network, nothing beats an intro from a co-investor. Next would be some other investor, like you've been pre-screened and qualified by someone who knows what they're talking about. So here's a tip. Never end any conversation without getting a referral. If someone says to you, like where we started, "Hey, you have a fabulous company. It's just not a fit for me." A great test to see if they're being genuine with you is to ask for 2 referrals. Always ask for 2. Multiply your network. If they're sincere and hey, it's just not a fit for you, they should be happy to introduce you to Sally and Bill, who you are a good fit for, because they'll win points with Sally and Bill. Sally and Bill like, "Oh, this company's great for me. I will remember to send you referrals." And companies like when they come across from me that I think are good for you. It's how people build rapport and credibility with each other. So if someone says, "Hey, you're great, you're just not a fit for me," ask for 2 referrals from they're an investor. Send me to your other investors. If they don't or won't, that's a sign that we're being polite, and that's fine too, but we're trying to minimize that. Then comes your investors. Again, your board should be out there helping bring in capital. Industry leaders, that goes back to the Pittsburgh Business Times and like just knowing other people who have been successful in your field or adjacent fields. They have networks. They've been around for a long time. Pick up the phone. It is a secret weapon to pick up the phone. There are so many people who only send emails and are just terrified of picking up the phone. You have an actionable event when someone does pick up the phone. You got them on the line. You don't have to wonder whether they saw your email or not. And people will tell you things on the phone that they would never put in an email. So if you can get comfortable picking up the phone compared to your peers, it's going to be like a superpower. And then finally, this is why people hire investment bankers. We've brought hundreds of companies to market. We've talked to these same investors over and over again. We have warm relationships. We're in contact with them all the time. And we know their likes and dislikes and can help you get there pretty quickly. Other tip here. So all this information we've been talking about is what you would store in a CRM. Salesforce.com is a very expensive CRM that everyone knows. There are many free ones online. Highly recommend that you start using a CRM. if you're not ready to sign up for a free account with some CRM, at minimum, make a spreadsheet. These are the columns you would put in your spreadsheet. So take a picture of this when you're going through Cap IQ and you're like, oh man, this is a good investor. What, I want to add them to my list. What's on your list? This is the information that goes on your list. I also like to have a column for a note, because when you're in the heat of it, like you're going to have a reason why you added them to the list that next week you will not remember. So not mandatory, but that's my own personal tip. Add a column for notes. Include your thoughts at that time as to why you thought they were a good fit, because you're busy, you're not going to remember next week. And then once you decide to start conducting outreach, like what do you need to be prepared? And this is not like, I've done my accounting work, I've done my legal work. There's other speakers who have their own checklists who have come earlier in the season. Their information, their talks are available through the Sports Center. This is for your marketing process where you're going out and you're generating interest. You're getting some heat in the market. You're creating a competitive dynamic. Nothing's going to help you out better talking to an investor than saying, like, I have 5 other investors who are also competing, for this 20 million. They all want to put in 50, but I'm only taking 20. Nothing beats that. It also helps avoid that drawn out cycle of endlessly fundraising and not running your business. So you have your contact list. You included like what their criteria are. So when you reach out, you can say, I match your criteria. That's in your personalized intro letter, which can be 50% canned, but take the time to write 2 opening sentences that say, this is why I'm reaching out to you, and I match your criteria. That will help you get through more, because that saves them having to go to, click through to see if you actually took the time to do it. And then a 1-page summary of non-confidential information that has that same criteria that you use to self-reflect. We call it, in the industry, we call it a teaser. You should expect that this will float far and wide. So don't put anything on it that you don't want to find floating around. But, general company size, that you're, in the process of a fundraise, any customer logos that you're comfortable sharing, and the ask. Attach that to the email. That's really where you start. It's the intro email, and it's that teaser that should give the person enough information to know whether it's worth responding to your email and getting on a call. Hey, does this fit my criteria? Is it interesting? Is it the right size? If you get them on a call, then be prepared with your pitch deck. I believe the Sports Center goes through workshops on how to build a good pitch deck. There's a bazillion examples online. It should not be more than 20 slides. So that's my tip that I'll give here. Over 20 slides, you are never getting through that in half an hour. 10 slides is even better. But you're going, one level deeper. Again, you've got them on the phone for half an hour. The end result is a decision point where they're going to say, based on what I've heard on this call, I think it's worth investing the time to learn more, and using up some more of your time, or based on what I've heard on this call, this is not a fit. Let me give you the reasons why and 2 introductions. And I'll save you from wasting any more time on me. So if the pitch call goes well and they're like, man, this sounds great, let's have a follow-up where we can dig in. That's where you should have your business plan, some of your early diligence, documents ready, because the last thing that you want is someone who says, man, I'm excited, I want to dig in and I want to invest now. And your response is, hold on, I have to go get my house in order and get all these documents prepared. I'll get back to you in 45 days. they are going to have moved on. You lost all your excitement. So that's why, when you have a fish on the hook, reel them in. And ideally, you have 4 or 5 in case, one flops off, this or that happens, X, Y, and Z. You didn't go through all this work to, come up empty-handed. And ideally, you can drive some like real competitive tension. Say, hey, I don't like the terms. I like your headline number, but I don't like the terms. And I have 3 other term sheets to pick from. So, like, I have leverage here. I have options. Let's negotiate. Yeah, those are your steps. Don't shortchange them. Once you go out to market, it's game time. So start early, build this up over time. It will take longer than you expect. And then once you're ready and you're prepped and you're ready to go, like dive in with both feet and go get it. Any questions, anecdotes, thoughts anyone wants to share? No, we just covered a lot. I see some brain wheels turning.
Like what kind of stage is Garber for startup to raise seed fund? Like we are making a demo, we're making a prototype, but I don't have engineers, so I can't develop it now. And can I just start to try to meet some investors, or I need to get some traction before I do it?
So at the stage you're at, I would be looking at incubators. So I'd be applying to the Sports Center. I'd be applying to Project Olympus, be applying to Alpha Lab. Those are the programs that cut checks that are 50K, maybe 100K. For companies at that stage where you're still building out the team, they have workshops, like they have a whole curriculum designed to take you from where you're at through the business planning process, building out the team, getting all those building blocks together. You're going to want that structure and added level of support. It's not inappropriate to go straight out to angel investors, but angel investors are going to expect you to have that baked and ready. That's what the incubators are for. So you get 50K, 100K from the incubator. They help you get your team built, get your business plan, get your marketing plan, work on your technology and get it ready for prime time that you can then go talk to investors.
Like the example of CMU investing in like a company itself. So this might be like what are the advantages of like CMU investing in that versus I'm assuming they're also like in companies where they have some venture funds that they're involved with. Like why would a company or like why would CMU want to invest through that? And then also like why would a company take that investment? Traditional VC investment.
So CMU absolutely is an LP in a lot of funds, and it's all part of just building a diversified portfolio of investments. So direct investments, higher risk, higher return. The reason you would take funding from CMU as opposed to any other VC is that CMU should be able to leverage their massive network to bring in more money and customers, the credibility that comes with it, and ideally access to all the brain power and resources that are on the campuses. So CMU 100% is an LP in a lot of high-performing, prestigious funds. They direct invest to make a return, 100%. This is not a charitable activity. But there's also a dual mission to propagate successful companies. So I came to CMU in 2008, and the number of companies that CMU spins out has gone up dramatically since then. Think of that as long-term investing. If you take money from CMU, you go build a big, fabulous business out of it. Maybe you build a building and you get to put your name on it and endow a bunch of smart people to host more students. So that's why. Great. So my contact information is here. Look me up on LinkedIn. Happy to talk to anyone. Business cards up front. That goes for everyone online as well. Good luck out there. Happy hunting. Go Tartans.